Stock market typically flattens out, near the year end, and then sometimes the last couple days of the year or the first few days of the new year, there are some very large moves. Being that we have not had a 3% correction in 2017, I almost can't believe I'm saying that. We're going to have 3% corrections and more coming up here in 2018. Yeah, and that's a little giveaway on my year-end forecast. So I would expect that the stock market volatility will pick up here as we cross over into 2018 and into the revised tax plan. That revised from where we were. Remember, I don't think it's tax reform. So take a look at the S&P 500 SPX. Amazing pattern when we look at this, as we look at this rally that came from right around 2016, beginning of 2016, following this upward trend and imperfect upward positive cyclic action. It doesn't get more perfect than this. The only thing that wasn't perfect was my analysis, because each of these declines, this one came after 17 weeks, 19 weeks on the upside, and now we're 17 weeks over here on the upside, or right there, 18 weeks, I think it is. So that's when you get these long right-hand translations and small corrections, right? And here, those are real oddities, real rare things to happen. So that's an important aspect of the analysis in here, and that's where we are right now, set up for only a modest time period for correction, then another rally. You can see that I'm projecting negatively after the next rally. The next rally could go out into February, March, April, we're not sure. But then rolling over and this big cycle right over here taking a hold for a real correction. So do you think you've had 5 of these cycles in a row? Do you think you can get a 6th? I don't. I mean, I think the 5th one was a long shot, and that's why my analysis was poor in this period, because I thought that, you couldn't have a 5th cycle that looked like this, but we did. And so that was a very low probability occurrence, and it would be an even lower probability occurrence to keep that pattern going. So that's a look at the weekly pattern, and here is the daily pattern. So the daily pattern is following this 18 to 20 day cycle. That looks like it bottoms right around the 9th or 10th of the year. So this is that call for the weakness coming in last couple days of this year and the beginning of the year next year. So this cycle low right over here is this cycle low right over here on the weekly. So I'm just going to zoom this in, and you can see this decline right over here on the daily is this decline right over here on the weekly, and that would wrap up this cycle bottom and then getting into the next rally period. And we'll see, there are people talking about 3,000 on the S&P 500. Well, who could argue with that? Maybe I will down the road. That's an important area there on those fib extensions right there between 26.95 and 27.08. So it stopped basically at that point on the way up. 26.95 was the last high. And so a pretty key area, and I wouldn't be surprised to see these next couple of weeks have some downside. Again, I don't think it's a 3% decline. It would be pretty strange if it fell that hard after this kind of strength coming into the new year. So minor pullback over these next several weeks is likely when you look at that. Don't ask me why I'm in the prediction game. It's something that I've done for a lot of years, and it's amazing, even in years that, like this year, were on the tough side, where I maybe performed as the market did and not any better. Overall, I get a tremendous amount of questions coming into December. Are you going to do the year-end show? Are you going to do the year-end show? So lots of people look forward to this, and I put a lot of work in it, as you can see, because I have to analyze all of these markets, especially on big picture type things for projections. So we'll see how that goes. We do that every year. Hopefully you will all be here watching my show next year when I take accountability of how I did. Hopefully I'll be here. And that's a key. We really appreciate all the support you give us. There's lots of ways that you can support us by becoming members, by buying our workshops. I have an amazing workshop coming out on cycle analysis. It's due sometime probably in March. It'll be 18 or 20 videos. It's unbelievable. You will never learn as much about technical analysis and cyclical analysis as in that video. So look for, as in that video series, so look for that coming. Support us, become a member. For the stock market, I'm going to do a big picture analysis and explain to you where this analysis comes from in the next week. So if you want to see that, again, that's for our members, so you'll have to be a member. The S&P 500, I expect us to see a low sometime in June. Could be late May, could be early July, but June is really where it all kind of lines up to, mid-June, based on the big patterns I'm looking at, of 2377 on the S&P 500. That would be a decline of somewhere around 12%. So I'm not looking for a bear market, but I'm looking for a significant correction and much higher volatilities throughout the year. I think that 2915 high comes late in the year. In other words, it has a correction and then comes storming back after that. So we'll kind of look for a bungee jump sometime into June, and then a high moving towards the end of the year of 2915. And I'm looking for a ultimate gain on the year. Yes, I'm calling for the 10th year of gains of this bull market for the year of maybe 3 or 5% on the year. That's after a big dip and then a big move to the downside. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.